You did. Hi, Tony.
I had to unmute myself. Hi, Brian. How are you?
I know I forget many times when I'm in meetings to unmute myself still.
Hi, Dawn. How are you?
Hey, Tony, how are you?
Very good. Denise, have I met you?
No,
Nice
not yet, Tony.
Nice to meet you.
Nice to meet you as well.
And
I'm Rick. I work with Brian. Hi, Tony. Nice to meet you.
oh, hi, Rick. Yeah, I've heard a lot about you. All good things.
Yeah, okay. Thank you.
Brian, what time am I on tonight?
Well, the great thing about that question is that the chair of the Board of Selectmen is here, and she can probably tell you much better. I don't recall off the top of my head. I'll look though too.
Yeah, let me just figure out what the timing might be.
No, the reason I ask is I'm at a client, so I'm just going to try to time traffic to get home. Hi, Libby.
Hi, Tony. How are you?
Very good. Yourself?
Good. I had to eat something, so I can't wait anymore.
That's fine.
What are we trying to move you up? Oh, is that me making that noise?
Yep.
I'm thinking, I don't know, like 7.
That's perfect. Yeah, 7's perfect.
I mean, I'm guessing with the stuff we have before it.
Yeah, I'll plan on being around by like 6:30.
If I need to, I'll text you to drive faster.
Just text me to drive faster. Yeah, that's all.
All right.
Maybe between 6:30 and 7.
Okay, perfect.
Are we ready?
Yeah, I don't, Melissa's not going to be here. She texted me and told me that, so I believe we're ready.
You're going to share your screen, Brian?
Yeah, do we need to call the meeting to order and go through the? I'm trying to remember who the chair, I think Dawn, you're the chair, right?
Sorry. I will call the July 7th Audit Committee meeting to order. Since it's a small group, is it okay to just reference that we are meeting consistent with Governor Baker's executive orders due to COVID and the additional provisions set forth by that under Chapter 20 of the Acts of 2021? Thank you.
Me, Dawn.
Okay, so.
Okay, so thank you to both Dawn and Denise. As you know, Roselli Clark and Associates is our auditors. They did come out last year and perform the audit of fiscal 20. Operationally, things ended in a very positive manner for us, which was we were very fortunate to navigate through COVID in an extremely positive way in fiscal 20 and hopefully into fiscal 21, which I believe will end equally as strong or maybe even stronger for us. So Tony is here. Tony Roselli, who is a partner at Roselli Clark and Associates, is here to take us through a PowerPoint presentation. We're not going to go through the 170-page CAFR. We have included a link in the agenda so that people could download it. He'll briefly go over the management letter findings, and we will talk about I think which the 3 are the most pressing that we're working on and discuss what happened and how we have solved those issues or will solve those issues to prevent that from happening in the future. So with that being said, Tony, I will share my screen with that presentation. Can everybody see that okay?
Mhm.
Yeah.
Okay. So we'll start here, Tony, on the second slide.
Okay, so just echoing Brian's remarks, the town actually, even though that last quarter was a little dicey for the entire nation and the world, actually, those 3 to 6 months there, the town had enough of a tailwind from a really very strong first 3 quarters, and also being the beneficiary of a lot of people migrating to the island to be protected from the virus. You ended up actually increasing your reserves, which is, kind of remarkable given what was going on. And I know at the time I was speaking with Brian back last March, April, when all this was happening, and thinking all this money and excise and that you've been receiving in the past, meals, that all that was going to go, going to be severely challenged, and it ended up not being. In fact, it was positive. So you had a net increase, pretty much operations at the town level, even though you were social distancing and doing all that sort of stuff, kind of went as normal. We did our audit pretty much on time, I think, Brian. I don't think there were any delays in the audit. I think you guys closed the books, and we did probably 60 to 70% of it remotely. We had 1 or 2 people on the island sending us things back to the office. So between the financial team at the island and my financial team, we managed to get through the audit. So it was challenging, but we got through it, and everyone was in pretty good shape. Just always show a snapshot of your reserve ratio, and Nantucket's always in that 30% range, which has earned you the AAA, well above the high-end metrics and the state average. So that's just, the financial trends that continue. You're way above the Moody's and the S&P modeling. And your new growth is still very high. And it's the town's walking that line between reserves and levy capacity very well. So you're continue to give the taxpayers a break, but you're also increasing reserves, which is what the bond rating agencies like to see. And you did get the AAA in 18. You've kept the AAA. You've one of 15 communities on the Moody scale to get a AAA, and it's just a very it just signifies the strength of the financial team and just the financial operations in Nantucket. So great job in that regard. Any questions on operations or any of that sort of stuff?
No, not for me. I have some questions later, Brian, in the report itself. Just a couple quick ones, but as I read all 150 pages, I, would like to ask a few questions from it.
All right.
A couple of informational items I always like to talk about, just OPEB, and OPEB's one of them, one of my favorites. Just got my cheat notes here. So the town has basically about what's that OPEB liability? 125 million.
Yeah. Oh, yeah.
Your OPEB liability at the end of 2020 was about 125 million. Okay, which is 40 million. It's increased about 40 million since 2015. So the question really bodes is, should the town get more aggressive in its funding process, or is the town satisfied that this is something that you're going to continue to do, and then you'll get a pension windfall when the pension is fully funded in about, I think about what, 13 or 14 years?
Yes. So it's fully funded in 2038 at this point.
So in 2038, your pension will be fully funded. And a lot of towns are taking the position that when we, let me just shut this door, hang on a second. Avoid some of the background noise. So, so that a lot of towns are taking the position that, you know, they're going to keep doing what they have to with the pension. The pension is a statutory obligation, and you have to fund the assessment. Once that's fully funded, you get the windfall. Other towns are trying to hit the OPEB, if they have extra money, are trying to hit the OPEB up front so that, you know, you kind of keep pace and you don't have this big number that you have to manage 13 or 14 years from now. Nantucket's kind of in the middle. Okay, you're hitting it with you're not just doing these minor increases in OPEB. You're actually putting a good amount forward every year. It's minor in relation to what you should be putting in or have to put in. And then the other thing that's killing you is the discount rate. The discount rate that was used at the end of 20 was 3.75%, and that's because of the significant decreases in the bond market, which is where your funds are being measured. They're being measured against the bond market, which is a very conservative place to be. Other towns are going into a more aggressive managed fund and are getting the 7%, 6 to 7% discount rates, which would have a significant impact on your OPEB. I'm not telling you to do that, but I'm just giving you some options of how to manage that OPEB liability. So I welcome any comments on that.
So as I pointed out in the town's response, a couple of years ago, the board did vote for a policy that would direct when the pension is fully funded, direct that portion of the assessment into OPEB. We do have a call with, we use Morgan Stanley to help invest that. And we do have a call to discuss opportunities to potentially become a little bit more aggressive in how we're funding that, because it is a much longer term investment than say a stabilization fund or something of that nature. It would require a small rewrite to our investment policy, which when we talk to them, we'll work with them on how best to accomplish that. So we have taken, I mean, Tony's recommendation is something we do take serious and we do want to work with, but we also want to be cognizant of the fact that we're putting $500,000 of taxpayer money in right now. And we certainly want to balance being aggressive with protecting the money and not facing huge losses on a year-over-year basis while we go through the market.
Okay, so Denise, did I see you unmute?
I did, and I was just going to say, I think something like OPEB, I know you can be more aggressive, and I tend to be more conservative. You know, I just, yeah. Especially since we do put $500,000 every year in, and it's should stay $500,000 or get more or increase, not be at risk. So anyway, I think it's up until now, I think, you know, as Brian said, it's great to have the advice and to take a look at it and see if there's anything that can be done. And at the same time, being fiscally a bit conservative on this topic that doesn't keep me up at night. So.
Yeah, and that's a good position to have. Like I said, I'm just pointing out what you can do if you choose to do it, to play around with that liability, to manage that liability. But certainly Nantucket, in terms of putting the $500,000 in each year, you're a little more aggressive than most communities in that regard. So you're hitting it better on that end, where you're putting the $500,000 in, where a lot of communities are putting in much less than that, but then they're getting riskier on the investment side. So it's kind of a balance there. And again, just something to keep in mind. Like I said, I'm not suggesting it. I'm not an investment advisor, so I'm not pushing you in that direction. I'm just offering some suggestions as you go through your thinking process when you talk about these things that are out there. So, so that's so thank you for your dialogue on that. I appreciate it. Next topic is network security. Real quick, I think the town does an excellent job with the security. You had, I believe, a full-blown network assessment done. You're doing trainings, you're doing your own where you try to trick your employees and see who clicks on those links and who doesn't. Brian. And but no, I think you're doing a good job there. We just like to put this out as a reminder, especially with the social distancing and the remote that's becoming more and more available to us. Just make sure everything's always protected. And I know you guys, because you're on an island, you do more things remotely than other places. So just to stay vigilant there. And I think the town is doing a good job there. So this is just a quick reminder on that. Any questions on that? Okay, the Nantucket.
So I don't have any questions, but can you guys hear me? Is my voice all weird?
It squeaks every time you talk, but I can make out what you're saying.
Okay. It might be worth noting, Brian, that we were just able to secure cyber security insurance.
Yep.
Although
Sure.
it doesn't come without a lot of requirements.
Yeah, so to Libby's point, as part of this renewal, with so many cyber attacks across the country, everybody in the program, the insurance program we participate in, cyber insurance was one thing that was potentially at risk, but we were able to secure it again, fortunately, which is it's a nice additional layer of protection to have. God forbid anything would happen, but we certainly, as I noted, the IT department is very vigilant, and we're all going through trainings that are sponsored by the Commonwealth. So we certainly are not going to let up in this area, because it's something that could have catastrophic implications if we were not to remain vigilant. So.
Okay, next, the NRTA, which is the transit authority that services the island. Right now, you're providing them some services, and with that comes some risk. And I had suggested that the town review that and make sure that that's a tolerable risk given the relationship, and if it should continue that. I think I know Brian has been in contact with the NRTA and is trying to transition out of this processing arrangement that you have with them. So again, I just thrown that out as an informational item that you do bear the burden of some of the risk of providing those services.
So to that end, I mean, I certainly have had talks with the NRTA administrator. We probably have different viewpoints on it. I think that it's not something that would happen in the extremely short term, but it's, I think, something that I am going to recommend that we consider at least formalizing the agreement and the understanding of what we're providing, and ensuring that we're, we have proper protections in place. God forbid anything ever happened when we were doing it. So I'm not entirely sure that we can completely step away. We have, based on discussions with Tony and his staff and his team in prior years, they have been removed from our insurances, and they've procured their own insurance. But in terms of the number of employees, it's so limited that it may be a scenario where we would be better served to formalize the agreement on the processing that we're doing for them, versus trying to move it out away from us. It's something that we'll continue to talk with the town manager on, and see if we can hopefully come to a resolution on how best to handle it. But it certainly is risk in the processing of the payroll for them, if we were to miss a deadline with their payroll. So there are some risks that we're assuming, and it at this juncture would be at a minimum good to formalize what we're doing and the expectations of all parties involved.
So Brian, how many employees are at?
I think it's only 2 employees.
Okay. And so there's no formal service level agreement signed?
There has never been one before, Denise, no. So, and it's 2 full-time year round. I think there may be some part-time seasonal help during the summer that is processed there. The majority of the work is through the contractor that provides the actual bus service itself, the drivers and everything for the buses. So it's not a large number of employees, which certainly in the past may have been why we didn't formally do it. But Tony certainly brings up a good observation that we, at a minimum, should probably do that.
And are the two union employees?
I don't believe they're in a union, no.
Okay. So a little less. So with missing a payroll. Okay. Thank you.
Okay. The next topic is real quick. We don't have to spend a lot of time on it. It's just a Gatsby update. There's a couple of new Gatsbys coming up, and that's really for me and Brian to deal with. There's one on leases, and there's one on fiduciary type activities like student activities and things like that. And that's more, it's not operationally affecting the town. It's more something that we have to present when we do the CAFR. So myself and Brian will be working on those Gatsbys and the information that we'll need to make sure that the town is in compliance.
And we have already worked on some of the leasing stuff, Tony, because we have to disclose it to, or we have to discuss it with Cinder to determine whether it has to be reported.
Yeah.
Or whether it's a material lease or not, that would be required to be reported to in the official statement. So we have started some of that.
Okay, so into the findings and recommendations. So the first one is the tax recap process. So when you certify, when your tax rate is certified by the state, what they do is they go through this document called the tax recap that the town, there's a number of hands in it. The assessor is involved, the finance office is involved, the town clerk is involved. So there's a lot of different variables that go into this process. State looks at it and then they certify it. Basically, in this document, it's more, do your sources equal your uses? So your uses being basically your budget, your capital, your capital plan, things like that are your uses. Do your sources, which are your real estate taxes, your personal property taxes, your motor vehicle, your meals, your state money from the state, all that is your sources. So those have to be in balance. If it's not in balance, then the state can't certify the tax rate. So what happened when we went through the process this year is we found that some expenses had been left off the tax recap. So in order for that to have been accurate, that means some revenues would have had to have been left off also. So fortunately for the town, the expenses that were left off, the town had such a good financial year that it offset any problem that the town that this may have caused the town. And when I brought it up to Brian, he immediately called the state to see, okay, what do we do in this situation? And the state asked him what your estimated receipts, how they were tracking. They were way above where they should have been. So the state said, no problem, let it go. I think a lot of the success of the financial team in the last 6 or 7 years helped the state make that decision. Had this happened, say, in 2012 or 13, back when the town was having a lot of problems, I don't think the state would have been quite so generous, but they've let it go. So you don't have any. So what happened was when you did your next tax recap, you didn't have to roll over any of that problem, which is normally what would have happened had the town not been in as good a situation as it was. So Brian, I know, has put in some new controls. They've gone through this process of creating spreadsheets to pick out errors, and also have sent the preliminary tax recap to our office just to take a quick look at it before submitting it to the state. So there are controls in place that hopefully will prevent this issue from happening going forward.
So to follow up, which is in the response, the majority of this actually was related to the capital exclusion that was voted at the annual town meeting. The capital exclusion was inadvertently left off the levy calculation, which would have been an immediate flag that we hadn't put all the revenues in because we would have had so much unused levy capacity. So, however, all of the expenditures that were actually expended were all lawfully voted at town meeting. So It was merely the fact that we inadvertently had left both off the recap sheet. We did talk to the state. They actually did tell me that this happens more frequently than they would probably ever like to tell everybody that it happens. It's happened in other communities. It certainly could have been a much worse problem for us. We're very fortunate that we had revenues in excess of projections to manage through this. So one of the first things that I did when they brought it to our attention is I sat down with both the assistant town accountant and the assessor, and we reviewed the process. Like Tony said, this is many people involved. It's multi-step. Many communities, ourselves included, are going up until the last minute to get this done, because a lot of it is dependent on certification for valuation to be able to set the tax rate. So we have reviewed the process internally, and now all three, being the assessor, the assistant town accountant, and myself, have to sign off in a checklist that this has been done and it's been agreed, and it actually agrees to the annual town meeting votes. And at the end, after we have input everything, before I submit to the state, we send everything to Tony's office, the annual town meeting actions, along with the spreadsheets, and they run through it, which we did when we set the fiscal 21 tax rate, and everything tied out and reconciled to the penny. So that was a step that we had never done before. And I think it's something that we probably should have considered in the past, to just have an outside eye versus all of the people and the staff in the town that are reviewing it, because as if you work in spreadsheets, a lot of the times, eventually, sometimes you actually see the number that you think you want to see versus what's there. And it was, again, we were fortunate, but the state was very helpful through the process. And many conversations with them, and they determined that because there was no actual deficits created and we had lawfully voted the expenditures, that there was nothing else that we needed to do. They most likely, I will tell the audit committee, they most likely will send us a letter reminding us how important this is, and that they don't ever expect to have this happen again.
Any questions, comments, or?
No, it sounds like you've put in the controls that are necessary and added an additional check step. So it sounds good.
Yeah, I think it's behind the town. It didn't create any financial burden. It didn't carry into the next year. So I think it's just a lesson learned, an educational process, and controls are in place now. Next item, closing process. I was expecting to write this one. I've got this in just about every town, just because of the pandemic and all the moving parts and the social distancing and the remote auditing and everything else. Things just didn't close down as well or as efficiently as they may have in a normal year. And some things kicked out, especially related to FEMA and CARES, that were not handled correctly, but the state had a moving target on that. They were constantly changing the rules on how those items should have been recorded in your ledgers. So I think this is an anomaly, hoping it's an anomaly, and that as we go into 21, it should not be happening for 21. So hopefully that's behind the town. And again, I was expecting to write this just because of the nature of what was going on.
We were certainly hoping we didn't have to have it written, but we recognized that it was a difficult year to try to close, because for the most part, many of our staff didn't get back until the middle of May, and it was a lot of work to do in a very short period of time. Normally we plan with everybody here to be doing it in a lot smoother process. To Tony's point, there was a lot of differing guidance that early came out with respect to CARES. So there were certainly some journal entries that we proposed along the way that, in a normal process, with the guidance having been a little bit clearer, would have allowed us to do that in a much timelier fashion. In this year, everything that is eligible for CARES in fiscal 21 has been or will have been, by the time before they walked through the door, been journal and closed out to CARES Act. So I do not believe that will be a problem in next year. And certainly we have spent, the assistant town accountant and I have spent an extreme amount of time going through the dates and the timelines with everybody internally, communicating necessarily deadlines to all the departments. So I do believe that this was a one-off, because due to the fiscal 20 versus what will happen in 21. And we certainly have made great strides in my time here in getting this closing process to be more consistent and more refined and more accurate. So I do think that it was an anomaly in terms of fiscal 20 versus what will happen in 21.
Okay. Next item is just a chart of accounts. The DESI has got some new requirements out there that are going to cause the school accounts to be configured a little differently. On the surface, it seems like it's a simple finding. And talking to Brian today, it's going to be a challenge to get through this and set this up the way DESI wants it set up. So it probably will be a repeating finding until it's fixed. And like I said, it's not going to be an easy one to fix because it does require some engineering of your system.
What's the logic behind changing it? What was the reasoning for it, Tony?
Well, the state's always fiddling, always looking for new ways to see things. So what I'm guessing is something happened in some other community that was, catastrophic or caused some serious adverse effect. And they said, well, let's make sure this is a requirement everywhere. So they want to see these accounts lined up. Before, you could just take buckets, lump them. Now they want to just see it differently now. And again, this is new. It just happened in the past year. And it's like I said, it's going to be a challenge. Not suggesting that anything is incorrect in terms of it's to me, it's geography. The state is looking for a different geography of accounts. So when we look at the geography in totality, it's accurate. It's just the way the state wants to see it. And it is going to cause some challenges.
Will they expect prior year restatements?
No. This is a go forward thing.
Okay. All right. Thank you.
I have talked to Martin about this. He does agree we need to do it. We've had preliminary discussions about it, but it's going to involve completely redoing the chart of accounts for the school, which will mean redoing it on both the school's internal parts, so portions of units, as well as the town's portions of units, and relinking how things roll up for us as well as them. So it's something that as I mentioned in the response, I think it's going to take at least through fiscal 22 to get this done, because with every community or majority of the communities most likely in the same situation that we're in, and with so many of them using Munis, it's probably going to take a little bit of time to get a Munis tech to even be involved in this. So it's not something that's going to be easily done, but it is something that we recognize and as a requirement according to the Department of Education, and we will endeavor to get it implemented.
Thank you.
The next topic is water inventory, and this is actually a observation we had made in the prior year when Heidi was down at the water department or the water company, and we went in and did some observational procedures on the inventory and the and we came up with some better ways to do things to protect the inventory that's down there, to have better control over it, access to it, so on and so forth. Because of the social distancing and the remote part of the audit, we weren't able to go down there this year to see if this had been fixed or if it had been rectified. It's probably, I'm not sure it's been addressed because Heidi left shortly after we had these discussions. So I don't know if the new people down there have even addressed this or not yet. I don't know if Brian, if you can.
No, it's something, as I noted in the management letter, that we're going to work with the director and the new business manager to formally mandate and put additional procedures in place. They do counts, but ideally I would like to see cycle counts on a quarterly basis. for the inventory. And I think there's some other very good recommendations, given the cost of that, certainly the water company has to plan in their budget in terms of security around the inventory that they maintain. But it is something that, as I noted, that I think I expect to be completed during fiscal 22 in conjunction with the water company director.
Okay. Next page, Brian.
Oh, sorry.
Well, the first one, abatement accounts, that's been fixed. Basically, in the old days, you had to carry every abatement account for each year separately. So basically, there's like, you end up with 60 abatement accounts in your GL. It's just very noisy. The state finally came to its senses, and as part of the Municipal Modernization Act, they said you can now merge those all together and call them one account, which I think was great news. It avoided you having to say you had a deficit in 1999, but you had a surplus in 2000. In the past, you couldn't combine those. So you'd have to go to town meeting to raise the deficit for 1999. Now you can actually combine them all so that if you have surpluses in some years, you just combine them. And I think it's made things so much more efficient. And the finance department's already fixed this on the ledgers. They have combined them all. So when we come in 21, we should see one account there.
You will see one account when you come in 21.
Okay, super. The old outstanding receivables, the town's chipping away on those. When we first got to the town, probably back in 12 or 13, the receivable listing went back 40 years. I mean, it went back far, all the personal properties, $12, $18, $36, just so many of them. Motor vehicles, same thing. There's just, it cluttered the ledger. So I had made a recommendation that there are avenues in the law that allow you to abate those. You have to do that and do it in conjunction with the assessor. In total, the amounts were not material. So I said, it's not even worth trying to collect those. Just go in, abate them. You have enough money in your abatement accounts, just polish them up. There is a process to do that. That's a little inefficient, just the way the state has set it up. But I think the town is chipping away on that. And I don't know if you want to comment, Brian, on what's been happening.
Yeah, we continue to work on it. We spent a lot of time on motor vehicle excise because that was the one that was originally highlighted by our auditor. There is a renewed focus on personal property, and some of it does go back. It's a little bit more difficult with personal property than it is with motor vehicle excise. So it's I have started the conversation with the assessor here, and it's something we are gonna work on and see how much of it we can actually abate or how to handle it or remove it if we deem it to be uncollectible. So it's an ongoing process that will eventually, I would expect, once we make more significant process, that we wouldn't necessarily see it on the management letter, but it's something that will be ongoing on an annual basis, because we'll make a determination in conjunction with discussion with them on what is the most feasible length of time to keep them on there before we start this process. So it's something that we, from here on out, will continuously be evaluating and doing.
Okay. I think Denise might have signed off. I don't know if she's still with us.
She's here. She turned her camera off for.
Oh, okay.
Yeah.
So tipping fees, basically those are the money collected over at the landfill. And those are collected by the Department of Public Works presently. We had made a recommendation that they probably should be managed over at the town hall and with professional collectors, not with Public Works. Some of these become old and the collection efforts aren't as great as they normally would be when you've got a real collection department working on it. This finding's been around for a while. You know, we started to highlight it again, just to kind of remind the town that you need to take a look at this. So again.
So I've had discussions with the DPW director. We've talked, him and I have talked preliminarily about the potential for us to take over the collections. I will say that currently the way the DPW does it, they do send to us notification of any delinquencies that can be liened to an individual or a business's tax bills. But as all of us on the call here are probably aware of, we also get a lot of people that come from off island to do work that need to dump up there and then just leave, and it becomes somewhat rather difficult to chase them down. So we have talked about how we are granting credit and what other steps we can take to strengthen the front end to prevent some of this from happening over the course of time. I do think that one of the solutions very well may be during the discussion of the fiscal 23 budget that we bring this into the collector's office to help manage, but it's there are ongoing conversations, and both him and I do agree that it's something that we need to work on in the very short term here to try to come up with a workable solution, because the continuing to have outstanding receivables in the solid waste certainly puts stress on all of the revenues that they generate. And that's something that would maybe help relieve some of that stress if we could come up with an even better solution. So it is something that we both really, we're going to be focused on working on this over the course of the discussions recently and into next year to solve this once and for all.
Okay, next is just bank accounts. I think Mindy's doing a good job of consolidating where she can at this point. The town does need to have a lot of separate bank accounts because you have different types of functions going on that have to have their own bank, that have to earn their own interest. We found that there was a lot of just carryovers, bank accounts that were kind of going stagnant. And I think Mindy's taken a good look at that list and is starting to consolidate those where she can. So we'll do a follow-up on that. But the recommendation is there just to reduce maintenance, just to reduce reconciliations if you can. And hopefully that's going in the right direction.
So we do, Mindy and I do talk about it, and of course with the water company mergers, we will actually be able to reduce a couple bank accounts, which is good. Unfortunately, we'll be adding a couple more because, as an example, the ARPA funds, the Treasury Department has issued guidance that requires this to be maintained in a separate bank account, separate and apart from all other monies in the town. So we actually have to create another bank account, not only in the town, but in the county to maintain this money. So it sometimes feels like every bank time we can close or merge one, we get more money that requires us to reopen another one. So it is an ongoing process. It certainly has been consolidated from when I first started, and I know Mindy is always looking for opportunities to do it. So it is something that we do focus or work on periodically throughout the year.
Brian, how many bank accounts are there approximately?
More, probably around 50 or 60.
Yeah, about 60, I was going to say, yeah.
Some of it too, Denise, is statutorily in the terms of, as an example, the escrow accounts for planning board reviews are legally required to be in an individual bank account. So there are some requirements of certain functions that we provide do, and that, as you can imagine with the development here, that has an opportunity to really expand the amount of bank accounts that we're holding. So when we can, we do consolidate to the best of our ability, but right now there's at least 60 that we have.
Yeah, my concern with that always is it's a great place to commit fraud that nobody catches because the bank account is just so obscure that nobody really pays attention to it. And the reconciliation is, $10, but it's 100,000 10 one way and 100,000 20 the other way. And oh, it only looks like 10s, right? So it's always better when you can have less, obviously. And it's just a lot of work to reconcile.
No, it certainly is a lot of work for the Treasury Department. One of the things that we have implemented, which was done as a result of prior year management letters, is we do a staff separate from the people who work on either posting on the Treasury side or the accounting side. they actually review all of the information that goes through both of accounts to make sure that it matches on both sides as a step to A, make sure we're posting everything on both sides. But B, another rationale to do that is B, if something is being posted on one side and not the other, it would raise a question of why isn't this been posted on either in the cash book or on the, most likely it's on the ledger, but not in the cash book. So that would hopefully be another step in the possibility of being able to prevent something from happening like that.
Thank you.
And last but not least is we did some very detailed payroll tests where we go through and kind of do an audit of the files to see if they have all the required forms. And we did it in 19, did not do it in 20, again, because of the issues with the pandemic. But in 19, we found that a lot of the ethics forms were missing and weren't updated. And the some I-9 forms were missing. And we did a sample of 25 and it was large enough. The items missing were large enough in relative to the sample size that I thought it might be a good idea for the town to actually do its own internal audit of all its files. And we're going to do a follow-up of that in the 21 audit. So so hopefully that's something that's getting done, Brian, or is nearing.
So on the accounting side, and I know that Amanda has been working on making sure that the ethics forms have been properly filed and as necessary. I think that some of the transitions that we experienced in 19 into 20 in terms of within the Treasury office, and more specifically within the payroll office, will have alleviated a great majority of this. Mindy has done a great job with the new payroll administrator, and the new payroll administrator has done a great job in making sure that the necessary forms are filed before an employee is even input into the system now and started, so that we, I do think that this will be a non-issue moving forward in the future.
Okay, I think that's all I have. If you have any other final remarks or questions?
Not from my side, it's straightforward. I had a couple from the report itself, Brian, and it's more observations than questions, but on page 35, you talk about, I mean, I have to say that when we have the ability to borrow up to what, 1.2 billion, I guess it is, and we're only borrowing 193 million. Again, it goes back to being fiscally prudent and conservative. And I would like to congratulate you and Libby, as with my dogs here, as to your fiscal prudent approach. I just think that's excellent. And then my one question is actually right in the front is on page 13, rooms and excise tax at 1.6 in 21. I would have, isn't that a higher number?
Let me actually pull that report up, Denise. I don't have it up, but I'll pull it up in 2 seconds.
Page 13.
Okay.
And then there was a significant spike in permits as well.
CAFR.
And I learned on page 131 that our total town value is $24 billion. So that was worth reading till the end for.
You are, I think, fifth.
That's
Highest.
fifth, but I can tell you that most likely, I don't have a number, but I can probably tell you that it's most likely going up for 22, because 22 is based on calendar year 20 sales, which we all know were very, very robust.
I think it's Boston, Cambridge, Newton.
Yep.
And there's one other one that might be ahead of you. But you're up there. It's great.
Okay, so what on page 13, what you're referring to is actually, that was the budget, Denise, that we had set based on the catastrophic expectation of what would happen, and that was 1.6 million.
Okay, thanks, Brian. So, I
Which,
mean,
as we all know, far exceeded what we thought it was going to.
It's a little higher than that, right, Brian?
just a wee
A
bit.
little is an understatement.
That's what I was wondering, how we got to a factor of 4. So there you go. Okay. No, actually, that was it from my side. Thank you.
I'm pleased that you read that report, Denise. Thank you.
Of course, actually, it's really interesting.
It's a nice report. If you really get to know a lot about the town when you go through that report. I really enjoyed it.
I didn't understand our 249 square miles of water that's part of Nantucket, unless you count the ocean around us. But that part I thought was, 49 square miles of land and 200 something, 245 square miles of water. I'm thinking we do not have that many ponds on this island. Just don't. So that was early on in the report. But then I thought, well, I'm probably misreading it or misunderstanding it. So, but no, it's an excellent report. I think if anybody really wants to understand what happens in Nantucket and how it works, they should really read this. So, but at least the first.
It is on the website.
Not yet, not the 2020.
2020 is linked to the website now.
Oh, it is now? Okay.
Yes.
I'm gonna send it to my husband, tell him to read it. So if I have to read it, he has to read it.
Yeah.
That's how that works.
Have you seen an award yet, Brian?
No.
Not yet, right?
No.
Still a little early.
Generally, the town manager gets the notification before I do.
But really compliments to the town. I know this hasn't always been the case, and really, I think, and Dawn probably can speak more eloquently to this than I can, but it's really, I don't wake up at night worrying about stuff like this. So good job, really, Libby and Brian and Rick, and to everyone, please give them my compliments.
We will. Thank you very much, Denise. And Tony remembers this too. Things were quite bad before Brian arrived. So
Oh.
really, thanks to Brian but also Tony, because Tony really helped steer us onto the right track.
I've definitely seen it go through a bit of a process. And now we don't, you're right, Denise, we don't worry. Maybe we should worry more, but we don't.
Don't worry, I worry enough for everyone.
We used to have these
You
meetings.
feel that, Brian?
We used to have these meetings on Skype because the town wanted to have a meeting every month, and it would get very expensive going to the island every month. So we hooked our office up with Skype. You guys had Skype on your end. Do you remember those meetings, Libby? We'd have, we'd all be around the table, talking, and that used to happen every month. Now I think we have maybe 2 audit committee meetings a year, at this point. So
We've come a long way already.
yep.
All right, well, we'll reconvene this evening.
Okay, we'll see you later on this evening.
Okay,
Yes.
so let's go ahead and
Thank
adjourn
you.
this meeting. Thank you.
Thank you.
Thanks.
Thanks, everybody.